Really fascinating day today. When we were down here, probably only a, I don't know, maybe 10 to 15% chance that we rallied with a new high. And today was one of those days where we did. And, you could see at the end of the day, we got this. And what is this due to? It's due to the weekly chart and the monthly chart. Today is the end of the week and the end of the month. So traders who trade the weekly and monthly chart are also establishing positions. So the more things that it is the end of, the bigger the potential for a big move. So you can see, in general, sometimes you have buy the close, sell the close finishes in general in the stock market, just at the end of the day, because the daily chart traders are trading. And when it's the last day of the week on a Friday, it's the end of the day and the end of the week. So there's an increased chance of some sort of big move. And when you have kind of the perfect storm today, where it's the end of the day or the end of the week and the end of the month all in the same day, you can get an even more explosive move. And then, very occasionally, you get something like that on, at the end of the year. But it's, the end of the year is usually a less volatile time in that last week. But anyways, I just thought, this was really interesting that we had this, and I didn't, I don't, you're not going to trade these rallies that often. You 60-point move in 5, 6 bars. A lot of traders aren't going to trade that kind of rally. Um, but I just, it's always really cool to watch. Bar one, a bear bar, but a big tail on the top. So what do bulls see? Well, bulls see a gap up, and bar one is a high one for them. They're hoping this is going to turn into some sort of bull trend, but you see, we're kind of in the middle of yesterday's price action, so it's really not all that great. Bar two is a really strong bull bar closing near its high. And now, the thing that bulls want to do is they want to keep the gap open with the high of bar one. So the bears who sold above bar one, let's say you're a limit order trader and you sold above bar one, you're really disappointed with how two closed. And you want to be able to scale in maybe above bar two. Not a good idea because it's a really big bull bar, but then again, selling above one, maybe not the best idea either. But theoretically, trader would sell here, scale in five, whatever, 10 points higher, some number of points, or on the close of the next bar. And they're hoping that four is or three is not another big bull bar, trapping them in. Instead, they're hoping we're going to get back to this one high and it'll let them out. And if that happens, this is probably a trading range open. Bar three, it's follow through for the bulls, but it's not really the follow through that those traders wanted if you bought above two. If you bought above two, you wanted to see a bar that looked pretty much exactly like two and get swept into a big rally. And instead, you got, this type of bar that it is follow through, but there's big tail on the top and the bottom. And so what do traders do? A lot of them are disappointed and they exit their longs, and that causes the big bear bar on four. You can see four was able to trade back to the one high, and it let traders out who were short. So they sold above one, they scaled in higher, and they used the sell off back down to the one high to exit. And you have a similar situation now with the traders who sold or who bought below bar three. If you bought below three, you knew you were probably buying relatively high in a trading range, so you knew you were probably going to have to scale in. But the traders who buy below three should have a chance to get out because two and three is strong enough for its own second leg up. So four, while disappointing, probably going to be a trading range, and we might have to go more sideways here rather than down. Five is an interesting bar. So if you're a bear, what you're trying to do is get the bulls to give up. So if you had bought below three, you see four and five. Sometimes traders will give up below five, and you get a big follow through bar on six. Um, and so bears are looking for that give up bar. So if you sold below five, your premise basically is that, first off, consecutive bear bars, we're always in short, but possibly you have to keep in mind consecutive bull bars 2, 3. So we might have been always in long after consecutive bull bars, and then we reversed. And so after consecutive bear bars, sure, we're probably always in short, but we might reverse again. So that's something to keep in mind if it's possible when it's a possible trading range open and you have magnets above. But what bears are trying to do is they're trying to get the bulls to give up. So the bulls who are long, they knew we were going to get a deep pullback, and they're scaling in down here, hoping to get some sort of bull bar closing near its high. And instead, obviously, like you see, they ended up giving up. But what do bears need with bar four and five? They probably need one more bear bar closing near its low, and then bulls will give up below it. Instead, you get a doji bar on six. Would I sell below six? I don't think so. Six is a really interesting bar because it's a doji bar and it's technically follow through for the bears. So if you sold below five, most algorithms see six as technically follow through, but it's the bare minimum follow through. So it's not as good as it could be. So while we are probably always in short and probably going at least a little bit lower, it's relatively dangerous to be short when you're getting these doji bars when it looks like it's probably a trading range open. Obviously, the pro to being short is sometimes this will happen, but a lot of times you're going to end up getting a disappointing bar. 7, another doji bar, relatively disappointing. You can see a lot of traders didn't want to sell below 6. There ended up being more buyers below there, but it is still a bear close. So we still do have bear follow through. So the bulls who bought below 3 are getting more and more concerned after 6 and 7. It would have taken one big bear bar closing near its low to make those traders want to exit, or it'll take 3, 4, 5 bear bars closing near or bear bars in general, or just non-bull closes to make traders want to exit. 8 is a bull doji bar. Do you sell below 8? I would not. I think, some bears would see a double top, but again, I think this is just sideways trading and you're waiting to see which side gives up first. Again, sometimes you're going to get this, but a lot of times the bears who are selling here, they're looking for this bar. And if they don't get it at a certain point, they're going to give up and get disappointed and we're going to get a bounce. And that will make the traders confident that we're headed back to this low. Instead, here you can see the bulls gave up and we got a big bear bar closing near its low on bar 9. Additionally, we have an open gap with the 4 low and the 6 high. So the bulls who bought below 4 thought probably second leg sideways up from 2, 3, and they're getting a good price to buy. And they were never able to get back to their initial entry price. So the traders who bought here are now trapped, and the traders who bought below bar 8, it was a bull doji bar, and they were hoping that even though we were probably always in short, we were towards the bottom of a trading range. Instead, you get a giant bear bar closing near its low on bar 9. Now, remember, I mentioned yesterday on the daily chart, the monthly chart, the midpoint of the month, we were about 50, 60 points above it. And the midpoint of the month was a little bit below 5,200. So it was about right here. I think it was 5,197. So it was somewhere down here. And when you get a huge bear bar closing near its low, bar 9, and a pretty tight channel on the open, I think it's credible to sell below bar 9, hoping that we get a move down to the midpoint of the month, which is a little bit below 5,200. You're taking the sell and you get, you're risking 11, 12 points trying to make 40 points. So it's a swing trade, but I think a 40% chance that you're going to get the move that you're looking for. So 9, a big bear bar closing near its low. We're probably going at least a little bit lower. And again, you might get bulls to give up here with how strong the bears have been. So any bear bulls who are still long are probably going to exit below 9, and you get follow through for the bears on 10. Now consecutive bear bars, we are always in short pretty clearly, and we're probably going at least a little bit lower. 11, more follow through for the bears, but getting climactic. Again, 9, 10, 11, really strong for the bears. So we're probably still going lower, but tough to be to be selling down here to initiate a short because, again, spike and channel, right? So we got the spike 9, 10, 11, and then the pullback 12, and then we got a channel down, probably towards a measured move. Imagine some sort of measured move like down here. So when you get 9, 10, and 11, 60% chance that you're going to get some sort of measured move down. Could be a leg 1, pullback leg 2. Could be a move from 9, 10, and 11 just straight down like we got today. 12 is an inside bar. It's a low 1 short, but a bull close. So do you want to sell below 12 if you're a bear? Not really. I think there's probably more buyers below 12 than there are sellers. And so a lot of bears, what they'll do is they'll end up taking profits somewhere down here from their short on 9. Since if you sold below 9, you're able to make exactly 10 points on bar 11, which is what caused the bounce on 12. So profit taking at 10 points is what's causing this bounce. But it's a bull bar, and you don't want to sell below a bull bar. So some bears, they didn't initially take the 10 points. They were hoping we were going to continue to sell off. And instead, they got this, so they'll take the 10 points somewhere in here as we start to go sideways. 13, a bear bar, it's follow through, but we're probably getting back to the 12 low since it was a bad sell. 14, a reversal up. This has been a pretty tight bear channel down, but I think that we're probably, while we're probably going at least a little bit lower, we're not going all that much lower. And you're getting a good bull bar closing near its high 14. So I wouldn't buy above 14, but I would exit longs above 14. 15, follow through for the bears. You can see they knew that other bears were going to, I would exit shorts above 14. You can see that traders knew that most bears were going to exit above 14 if it triggered. So they sold the close of 14, trying not to let it trigger, and that's what caused 15. There is a chance, there's always a chance, but there is a chance when we're starting to do this that traders realize we're all probably just going to go here and they'll start to give up. And I thought that was what was happening here, but you can see we'd never quite reached the magnet. So 16 follow through for the Bears. It's consecutive bear bars, but big tail on 16, a lot of overlap with 15. It's really not all that great to be selling down here, especially with how strong bar 14 is. We're probably getting back to that close at some point. 17 is a doji bar. I think if you're short for any reason, you're going to exit. And, I had this marked because it's just kind of an interesting idea, but you can see we have a bear micro channel, right? From bar 4 to bar 17. So roughly, 13, 14 bar bear micro channel here. And you know that when you have a micro channel that long, generally traders who are short for any reason are going to exit above 17. One of the reasons being, it's a relatively small bar, so they're not losing much on the reversal up. And they know 14 was really strong, so we're probably going to at least test back up to here. If you sold for any reason, you probably are at a pretty reasonable profit. So most traders are just going to exit above 17 and look to sell again after a couple legs sideways to up. And that means you can probably buy above 17 for a scalp, as crazy as it sounds. Now, you have to keep in mind, you're not buying above 17 and looking for a rally even to the moving average. You're buying above 17 looking for a 5-point scalp. And if it starts to stall at all, you're getting out. And you can see the traders who bought were able to make roughly 5 points, just a little bit more. And if you did take the buy, again, you're scalping out once you get your 5 points or the moment that 18 starts to stall. So, at the absolute latest, when you see the bar 18 close, I would just exit the trade. But it is, I think, a credible buy above 17, just looking for a quick bounce to the upside, knowing higher probability we're getting to at least the 12 low since we haven't closed that low yet. But we did have the bear spike down to 11, and this does seem to be the channel phase, and it looks like it's turning into a trading range. 18, a bull bar, a strong close, a reasonably big bull bar, but not a very strong close. Above its midpoint, but for me, I think this more just looks like an indication that we're probably turning into a trading range rather than some sort of bull trend. So I think we're probably going to be more sideways here. And a big bear bar closing near its low, 19. I thought we would probably get back to the bar 18 close. At some point, I didn't think this was going to happen until basically I thought. Well, I'll explain. But something interesting I thought happened in here. So bulls, you can see 19 was probably caused mostly from bulls dumping their longs, but there's going to be buyers below 18 and 17 because it's consecutive bull bars. So probably more buyers down here than sellers, but really good, really solid bear bar, but expected buyers down here basically. Reversal up on bar 20. Do you buy above 20? I would not buy above 20, but I do think that the traders who do buy above 20 and are willing to buy more below 20 with a stop and measured move down of the bars, plus a tick or two, are going to have at least a 60% chance of us reversing back up to the bar 20 close. So I thought we probably weren't going to go straight up. We were probably going to pull back first, but I thought traders would be buying below 20 as well. 21, follow through for the bulls, but it's a doji bar. It's not the follow through you wanted. If you bought above 20 hoping for a trend, you wanted 21 to be something, like similar to the way 75 looked. You wanted to just completely blow traders out of the water. And instead, you got bar 21, which closed below your entry price. So traders use the rally up on 22 to exit their longs, and that's what causes the bear bar to close near its low 22. We have a wedge channel, I would say 14, 17, and 20. So we have the spike and then the wedge channel, and 22 is attempting to break out below the wedge. When you get a breakout attempt below a wedge, it's generally pretty 50-50. However, I thought we had magnets above, and I was really not very confident in the bears here. I thought this was going to form a trading range rather than a continuation of the bear trend. So I thought 60% chance that the breakout to the downside here was going to fail. And you get a good bear bar closing near its low, 22, which is not good for the bulls. So the bulls who bought and they scaled in, they didn't really want to see 22 close on its low, but it does. 23 tries to reverse up, but not really all that able to. Bulls were hoping failed breakout below the wedge and to get the reversal up, probably back into this area. At the most, they want to test the top of the top of the channel, which is somewhere up here, but I'm not all that sure that we're going to get there. And then 24, an inside bar closing somewhat near its low. And interestingly enough, we have not tested back up here. And I thought at this point we probably should have. So we probably should have started to get the bounce back up to this area. And I thought 60% chance, like I said, buying here, scaling in, you're going to make money. 80% chance you're going to be able to avoid a loss. And I thought it was really interesting that we hadn't got back here, which means that this might be part of the 40% chance where those traders get trapped. And then 25, you can see we got a sell-off, but a big tail. We tried to break out below the wedge, but we failed. Do you buy above 25? No, I think it's just better to wait. I think it's going to start to go sideways pretty soon, but there is, like I said, when you're 20 points above really important magnet, which is the midpoint of the month, there is a reasonable chance that we just vacuum that straight down to the magnet. So what do I need to see to sell? Well, I need to see a bear bar closing near its low. And if I see a bear bar closing near its low, I can look to sell it for that swing down to that measure or down to that measure move. 27 or 26 is that bear bar closing near its low. I think you can sell below 26, but it never triggers 27. So disappointing, but not really all that thrilled about the huge tail on the top of 26. Still reasonable to take the short, I think, if it triggers, but basically betting that this is going to end up being a vacuum test, but you need pretty good follow through. 27, an inside bar for the Bears or for the Bulls. I'm not taking anything here. This could be forming some sort of final flag. You can see 28, another inside bar. So we have an II. It's a final flag for the Bears. So usually when you get some sort of final flag, you get a breakout attempt below, and the breakout will fail. And then 29, a bear bar closing near its low. Good for the Bears. This could be the breakout below. I think that if we are going to sell off to the magnet, we're going to do it now. So if we start to go sideways anymore here, we're probably not going to end up getting down there. So I thought selling below 29 was pretty credible, as if we are going to get the swing down, it's going to happen right now. Doji follow through on 30, but it's not, it is follow through, right? So it is a bear bar. So it's still follow through. And it's not a bull bar closing near its high, most importantly. Because 29, the risk you run is that this is a trap and we get just a reversal up, and then this becomes a trading range. I thought only maybe 40% chance selling below bar 29 that you're going to get a swing down. So a lot of times here you are going to get trapped, but you get a doji bar on 30, which is follow through for the Bears. The Bears who are short, some waited to see the follow through on 30, and now it's follow through, and they can get in around the same entry price, so they'll sell the close of 30, and we get a bear bar closing near its low or near its midpoint, below its midpoint on 31. An inside bar, 32, a reasonable sell. You're looking, again, I think, to get to around 5,200. I'm not sure we'll get all the way there, but that's what the price point you're looking to get to. Follow through 33. These are relatively small bars, though. A lot of times when you do get a vacuum test, the bars get a lot bigger and a lot more climactic, something like that. And more follow through for the Bears, 34. Again, we're getting pretty close to the magnet, but sometimes you get close and then you end up getting a reversal, since the traders, the bars are not big enough and it's not climactic enough to make me think we're going to get down to 5,200. And you get the reversal up 35. I think if you're a bull or if you're a bear, you're going to exit for any reason above 35. We have a wedge, 1, maybe 15, and then 30, 35, but obviously like a massive overshoot here. But it's still, I think it still should be seen as a wedge. Oh my God, hold on. 1, 2, 3. So it's a big wedge, a failed breakout, below, well, I suppose it's not quite a failed breakout. Sorry, I'm pretty tired today. But you could also say 1, pause, 2, pause, 3, reversal. So some sort of midday reversal. It's a little earlier in the day than you'd like to see the midday reversal on 35. But point being, 35 is a credible buy to make at least 5 to 10 points. 36, disappointing follow through for the Bulls. Some traders sold the close of 35, trying not to let it trigger. A similar situation to what happened on 14. They were hoping that although we got the pullback on 35, we were now going to get a vacuum test of the magnet. But 36 lacks any sort of strength. So 36 not convincing enough, and a lot of traders exit the trade. You can see anyone who sold below 34 was disappointed 35 and used 36 to buy back their shorts rather than short more and try to get some sort of measured move down. 37, a bull bar, but not quite closing near its high. It triggers the buy above bar 35. Good for the Bulls. But I don't think we're going, we're probably going to get at least some sort of rally, but I don't think we're going all that high. We might be getting to, I don't know, I thought the 27, 28 low. You're probably going to get some sort of reversal up here, but this was very unlikely. This didn't become higher probability until somewhere in here, in the 42 to 40, probably the 44, 45 area became high probability. 38, a bull bar closing near its high. Good for the Bulls. We're probably still always in short, but contextually, we're always in long. This sell-off probably doesn't have much more to it. And to be honest, if we were going to vacuum down to the 5,200 magnet, we would have done it. It's pretty unlikely that we're going to start to rally here and then just reverse back down. So I think the remainder of the day is probably going to be relatively sideways to up, but most likely sideways. So the question becomes, what's the magnet we could test? Well, again, I thought the 28 low was pretty credible. We get a bounce to there, but we might get all the way back up to the bar 18 close, since it was a really big bull bar closing around its midpoint, but still a really big and important bull bar. You could argue, since we had a spike 9, 10, 11, the top of the channel on 12 is going to be an important magnet for later in the day. 39, disappointing follow through. So if you had bought above 38, 39 is not really the follow through you wanted. You wanted to see something a lot bigger and stronger. And then 40, a doji bar, it's a low too short. The low one triggered below 37, obviously a bad low one, buyers below. And then the low too short below 40, but not really very good. A bear doji bar, I'd rather wait and see what happens. 41, disappointing follow through for any of the bears who sold, and then a bull bar closing near its high on 42. So we're not really getting any good bear bars here. A lot of times when you start to get a rally to the upside after such a protracted bear move, you start to go a lot more sideways. But here we're getting a lot of a couple of decent bull bars closing near their highs. We're not really getting any sort of good bear bars closing strongly at all. So again, could be a bull move. So probably reasonable, I would say, to buy above 42. You're looking for a breakout above this, you could say wedge 35 high, 39 high, 42, or 35, 40, 42. And you're looking for some sort of measure to move up. So I think relatively 50-50, okay to buy above 42. And if you get a bear bar closing near its low, you just get out. And instead you get follow through bar 43. So good for the bulls, probably going at least a little bit higher. This is a pretty tight channel. 44, more follow through for the bulls. Bull bar closing near its high, 4 straight bull closes, and 3 really good bull bars. So 60% chance we get some sort of measure move up from probably 42 through 44. Again, we might have to get all the way back to the 18 close. I think that's where we're going to end up going. And you can see that was roughly what we oscillated around in here before making a decision. 45, more follow through for the bulls, so it's by the close. 46, it's still by the close, but a tail on the top. The buys were probably 42, 43, 44, more so than 45, 46, 47, but it is still by the close 45, 46, 47. Really tight bull channel. If you're buying up here, you're looking more for a kind of explosion to the upside and some sort of climactic bar for like a scalp. So buying up here is probably more you're looking for a quick bounce and a scalp rather than looking for a swing, more like which is what you'd be doing if you're buying down here or down here a lot of the times. So you have to keep that in mind. But again, if this becomes a trading range day, we have all sorts of magnets from earlier in the day. This is a really strong bull move, and you know that the bulls who bought below 7 are still trapped. The bulls who bought below 3 are still trapped. We have the open gap with the 4 low and the 6 high. We have the open gap with the 7 low and the 10 high. So a lot of open gaps in a lot of places that we could potentially rally to. Did I think we were going to get there anywhere up here when we were in here? No, not really. I thought that we were probably going to start to go sideways relatively soon. I kind of looked at this as what would most likely be the end of the day. And we were just going to oscillate sideways. Obviously, again, end of week, end of month. So sometimes something like this will happen, but it's pretty rare. So 49, a bear bar, a doji bar. Do you have to exit below 49? Probably don't have to, but what are you expecting, right? You're not really expecting a big outside up bar and an even stronger breakout. We've already had the rally. We're probably going to go sideways like we did. And it's probably going to be pretty tough to hold. So I think it makes more sense to just get out below 49. And if you're long, and then just look to see what else you can do later. 50, theoretically follow through if you sold below 49, but it wasn't a good sell. Bears would argue wedge 1, 2, 3, and buy climax. So at least a couple legs sideways to down, but it's not really worth taking any sort of sell there. 50, probably more buyers below. You can see reversal up 51. It's a high one, but I'm not buying a high one after this protracted of a bull leg. We probably need to go sideways for, I don't know, an hour or two before anything can really happen. Follow through for the bulls on 52, but a big tail. And you can see probably better to sell above 49 than it was to sell below it. And we got the sellers above 53, but those traders are going to scalp out. You can see if you had sold, if you had sold below 49 or 50 and you had scaled in more above the bar, you were able to use the sell off on 53 to exit. And that's exactly what happened. Rally on 54, but right to the 52 close. To me, you're buying high in a tight trading range. 55, a bear bar with a reasonably decent close, but I don't know. Are we going to get some sort of big sell-off after the move from 42 through 48? Probably not. Are we going to get some sort of huge rally after the move earlier, basically the entire start of the day? Again, probably not. So I think it's tough to want to take anything here. We are holding above the moving average, though, which is important for the bulls. 57, a bull bar, but a tail on the top. Bulls would argue that we have the strong move up from 41 through 48, and we have a 3-push pullback, 50, 53, and 55. And then you buy above 56, hoping for a continuation of the bull trend, but might be more of a scalp. This looks like a tight trading range, maybe a final flag. We might have to come back into it. Follow through 57, but a big tail shows traders are scalping. And you can see no one really wants to buy above 57. And although 58 closed near its high, it ends up being more of an area where traders are scalping rather than an area where traders are considering buying more. 59, an inside bar. If you're long, probably just exit below 59. But again, I don't really want to. This is not the area to be trading. This is the area to be trading. This is the area to be trading. This, maybe this. Pretty much anywhere up until here. I don't want to be trading in this area. It looks like we're going to start to go sideways for a while, and it's really easy to lose money when that starts to happen. Bear bar closing near its low on 60, but we're probably going to rally back to maybe the 58 close at some point today. 61, disappointing follow through. Relatively expected. I don't think we're going far down if we do go down, and we're probably not going far up if we do go up. And then bull bar closing near its high, 62. Interestingly, not able to get a close below the moving average. Big follow through for the bulls, 63. You can see the high one on 61, but we're probably going to come back. You can see we have an open gap. Small. It's only a tick, but we do have an open gap with 61 and 63. So the traders who sold above 61 are disappointed in 62 and 63, and they probably want to try and get back to the 61 high, and we probably will. So follow through for the bulls, 62, follow through for the bulls, 63, but this looks really climactic, maybe a wedge, 1, 2, 3, or 1, 2, 3. I don't know how much higher we're going here if we do go higher. 64, bear bar closing near its low. Probably just going to test down into this area if we do anything at all, but it's going to be a minor reversal because 62, 63 is strong enough for its own second leg up. 65, follow through for the bears, but again, there's going to be buyers in this area, and that's why we get the tail and the rally up on 66. But important that we can't get closes below the moving average. It seems bulls keep buying the moving average. 67, an inside bar. It's a high one, but a bear bar. I don't really want to buy above a bear bar. We're probably getting to the 63 close. And again, interestingly, we keep getting closes above the moving average, but it's not all that great to be buying here. 68, follow through. Good for the bulls. We are always in long. We're holding above the moving average. The bull bar closing near its high, so you can take the buy, but it's hard to do this late in the day. But again, you might be doing it trying to get a close with the 7 low, or a close here, or close this gap. So you might be doing it looking for something like that. Follow through 69 for the bulls, and then an inside doji bar on 70. Not all that good a follow through, but again, 70 is technically follow through. Then 71, a bull bar closing near its high, but 1, 2, 3. 1, 2, 3, a lot of possible tops here. And then a reversal down 72. 72 should have gotten 2 legs sideways to down. I think most likely, maybe 60 to 70% chance that if you sell below 72, you're going to get some sort of second leg sideways to down. And you got a disappointing bar on 73, which definitely happens sometimes. But interestingly enough, an inside bar high 174, it never let you out. So I thought that the traders who sold below 72 were probably going to get another leg sideways to down and a chance to get out. And instead, we got this, this inside bar 74, and then a big explosion to the upside on 75, trapping pretty much all of the bears. I thought, 75, I thought the magnet was just going to be the bar 3 low. So I was done trading, in the middle of the day. I did relatively decent in here because of the style that I trade. And so I thought, maybe buys somewhere in here, but I thought, once we started doing this, I wasn't really interested in trading anymore. I just thought, be done for the day. 75, a bull bar closing near its high, follow through 76. It's by the close. It's a by the close finish. It's again end of day, end of week, end of month. So possible big rally, but this is pretty rare, and it's more just entertaining than anything worth trading. For stop orders on the day, you can sell below 5, but you probably want good follow through, and it's kind of tough to sit through 6, 7, and 8. But it is always in short. I think 4 and 5. So okay to short the close of bar 5. But I just had a lot of problems with 2 and 3. 9, definitely sell the close, looking for a measured move down, follow through 10, 11. So always in short, open gaps, we're going lower. But this is getting climactic if we keep selling off at this pace. I probably wouldn't sell below 15. You can, but I probably wouldn't. 22 is probably okay, but it's definitely dangerous. and then 29 sell to close, 30, 31, 32, 33, 34, all reasonable sell to close. You can buy above 35. It doesn't trigger on 36, so you get filled on 37. You can also buy above 38 if you instead wanted to wait for follow through. I a lot of times will see this trade more as a scalp. I think it's you buy, you look for 5 points, maybe. Maybe I'm crazy, but I think you can just buy here. Yeah, you can see what did the bulls who bought get buying above 30, 35. They bought and they scalped out with 5 points. That's what's causing these tails on 39, 40, and 41. And then instead of just continuing sideways, we got another good bull by closing near its high 42, and then we started to buy the close rally. So I thought this trade made sense to scalp out with a couple points and then see what happens, maybe by the breakout if you get it, and it turns into an endless pullback like it did. 42, 43, 44, 45, all by the close. 46, 47, 48, still by the close, but getting relatively high and towards probably what is going to be the magnet. So more of scalps up here, I think. I wouldn't buy above 51. I'd rather just wait. 50, 56, I get it. It's 3 pushes and it's sideways to up, so good for the bulls. But I think it's just hard. I don't like trading in this area because I think a lot of times here we just go more sideways the rest of the day. Probably buy above 68, 69, maybe 71 is really climactic. I think you exit your longs below 72. I don't know if you sell 72. That's kind of tough in this bull trend, always in long, holding above the moving average. So I wouldn't sell it, but I think you probably have to exit longs below it. Expect a couple legs sideways to down. And honestly, it's so late in the day that just be done. But if you have the energy for it, buy the close 75, 76, 77, 78. But again, if you're buying like 77, 78, you're looking for the next bar to be, and you got lucky this time because you kept getting good follow through, but it's just really difficult to be buying this high. On the daily chart, so we did get something rather disappointing as expected for the bears. Didn't quite get to bar to 5,200, but again, does this mean we get this big bar closing near its high? And this is going to be a massive second leg up? No, probably not. Are we probably going back towards the all-time high? I would imagine we are. We'll probably stall a little bit in here somewhere since it's a tight trading range. But again, I think we're just going to be sideways. We'll probably be within this upper range of this high and this low for a little while, maybe going a little bit higher or a little bit lower than the range, but relatively within this range for a little while. And then ultimately within this bigger range between 5,000 and I don't know, maybe like 5,400. Maybe 5,500. We'll probably be in that range for a while, but I don't think we're going that high. I think we're probably going to be pretty sideways here. The weekly chart, really disappointing bar. If you're a bear, we got a lot of buyers below here, and it was closing near its low for so much of the week, and then it got bought up into the close. The bulls who were buying it up into the close wanted this to be a bull close and a good high one, but instead, disappointing. So sometimes when you see it set up like this, what'll happen is the bears or the bulls who were long, they were hoping, maybe they bought a 50% pullback of the rally. Maybe that's the magnet we were going for. I suppose that would just be the same as the monthly magnet, but they bought a little bit before that, and they were hoping to see a bull bar closing near its high, and instead they got a bear bar. So occasionally what will happen here is you'll just get a dump bar next week where the bulls exit their longs and you get a big bear bar, but probably more likely we'll trade above it, probably sellers above. On the monthly chart, we finally closed the monthly chart. Good for the bulls. So big bull bar, mostly undoing this. But again, I still think trading range. So we'll see what we get next month, but it probably will not be a big bull bar closing near its high. We'll probably trade above last month's, above May's high in June, and then start to go more sideways. All right, that's the